Good afternoon, welcome to the TheoTrade afternoon video. I'm Blake Young. Today is October 2nd, 2025, and we're going to talk about home builders leading into mortgage companies today. So we're going to continue our conversation from last week about looking for shorts in home builders, but we will expand that into mortgages. To start with, we're going to deal with the interest rate. We've talked about the rate cut, the idea that the Fed cut rates in September, and that there's a higher likelihood now they're going to cut once or twice more in this year by December, and we're seeing that the rates in the 10-year Treasury note are finally fading. So after they cut, we actually went higher in interest rates, and we still haven't got back to the same lows. So when they cut here, the market reacted to it, we bounced up, we went higher, and we're just kind of back in that same level. So we haven't gone back to the lows, and we haven't seen a full even 25 basis point drop in the 10-year Treasury, which means that mortgages haven't got cheaper. And because mortgages haven't got cheaper, and because we're seeing that the home builders are not selling, and because we know that the non-farm payroll and ADP have been showing more and more job losses, I don't anticipate that home builders are going to continue to recover. So we had this great recovery, we broke support, we cleared the 20-day, we're down here, and I see this as a pretty clear, consistent setup for a big bear flag. And anytime you have a widening pattern, that is often the signal of a new trend and reversal. And so, new trend for sure, but reversal potentially. And if it's a bear flag, we're talking about a move from 118 down to about 105, a 13-point move. Let's just call it 12%. Now, I looked at DR Horton last week. I like Toll Brothers for the similar setup. We broke through the trends. We've come back up to this level. It's a similar 11% move. And Toll Brothers could be set up as either a stock position or a position that is an option. But one of the things we will look at is the financial page under Analyze, and note that their quick ratio is 0.34. So they have to sell inventory. If they don't sell inventory, they're only going to make it about 1/3 of the year, we'll say 4 months. They have to sell inventory, otherwise they start defaulting on their debt. Notice their revenue, their net income, their earnings per share, their dividends per share, all have been sliding and are down quite a bit. And again, they have to sell inventory just to make it through a year, and they have to sell inventory within 4 months to be able to get this thing to support itself through a slowdown. But if mortgage rates have not fallen, borrowing is not up, this becomes an issue for them. Now, like I said, I've talked about home builders probably a little bit too much, so I want to talk about mortgages, mortgage companies. And to do that, we go into the financials. We can click on this under financials and go to, well, we could do consumer finance. That's going to be your capital and financial. You could do financial services, and under financial services, you'll see lots of different choices there. But let's stick with banks, and let's look at regional banks, because regional banks are the ones that tend to lend money. And then we're going to look at a very specific mortgage company to kind of round out today's discussion. So these companies like MTB, TFC, HBAN, RF, and CFG could be some plays to take in bearish strategies if we see mortgages and lending slow down, because they do a lot of lending. That means that their finance, their income is going to slow down. But we could also just stay with KRE, regional banks, as an ETF. And this is a little bit harder to determine which one to use for the trend line up. But whether we did the faster trend here or the longer term trend here from the lows, it looks like we've broken the trend. This is an end of the bullishness, end of the recovery, and a breakout. Now the height to the low repeatedly here is about 10%. So this breakout should lend itself to a 10 to 11% drop in the regional banks. And we could go into the trade tab and say, okay, is it easy to borrow? Nope. So it's hard to borrow for KRE, which means I can't just short the stock. It means I want to look at option trading. If we scroll down all the way to the bottom and look at the current IV ranking, it is 25%. That means I probably want to be a buyer of puts. If I think it's going to take some time, going back to the chart, how long does it take to pull back? Well, it could take about a month. And so if we break out here, it could take about a month to fall back to the next level and get that 10% move. And if we're a buyer, we want to buy at least a month worth of time. And therefore, we'd be looking out to October. But notice if we go out a little bit further, we could be buyers at 20%, 20th percentile implied volatility. and buying that 20th percentile, buying a put here on KRE is going to be relatively inexpensive. And as you know, I like to look at buying deltas for trend trades that are closer to 70. So we'll add just a couple more strikes, and we want to go with this 66. And if we drop 10% and we own the right at 66 and we drop down from 63 to 57, then this would be worth about $9. That's assuming that it expires there. If there's any time decay left, it'd be even worth more. But buying the 66 put looks pretty attractive to me on KRE. Now, here's the stock I want to look at though. I want to look at one that only does mortgages, and that is Rocket. Rocket Companies, Rocket Mortgages. You've probably heard of them. You've probably seen their ads. Rocket Companies has broken its trend line. Now, the gap down, close down is a continuation or a runaway gap. So we expect this to go lower. Now, I expect it to go down to about 14 and try for that gap in this area through here. Go back to earnings from last time. And part of the reason why is the earnings are really stinking it up. Let me go to the Analyze tab with you really quickly. If you look at the Analyze tab and look at the financials, Rocket is losing money. Net profit margin, they are losing about half a penny there. Their return on equity is negative. Their cash flow is negative. Their free cash flow is negative. They are leveraged up and they're losing money. Their net income has been falling in negative, currently negative $102 per share. This is a bad deal here. So they're losing a lot of money. Now, maybe there's other things going on. They may be doing some financial shifting, but the fact is the company is not healthy. And so if mortgages slow down, they create even less cash flow and therefore less chance of free cash flow. And this trend is likely to continue down here. Now, it took about 2 months to get up there, so it could take 2 to 3 months to get down here. We could certainly look at going into the options, go to the trade tab, scroll down, look at the options. They are at a current IV ranking of 40%. That means I want to be a seller of premium. The problem is that when I ran the numbers, two things. One, it's hard to borrow, so I can't just sell the stock. And two, if I sell a call vertical with a reasonable probability, it doesn't pay me enough. I want to get paid 25 cents per dollar wide spread on those short verticals, but it doesn't pay me enough. So now I need to say, okay, can I collect enough premium on the side I'm selling and buy deep enough in the money that I really am not paying any of that implied volatility? So I would be going out into November's option because it could take 2 months to get down to our target because it took 2 months to get up to where it was at. So if I go all the way out to November, in fact, let's use this November 14, 43 days because it's low implied volatility. And if I were to go out there, I'd be looking at buying a delta near 70. That means I'm going deep in the money here and I'm going all the way up to 22. Now at 22, the spread's a little wide, so I don't know if we'll get a fill there. At 22, we're theoretically paying 85 cents. So we will need to probably work this number tomorrow, see what the liquidity is, or go closer to at the money. Because right now, these just widened out. They got much worse than they were just a minute ago. But even if this is the case, if we're getting we're paying 84 cents of time decay for 43 days. If we sell 15 days, we have 3 of these that we should be able to collect premium on. So if I can collect premium of greater than 1/3 on these rolls, I should be able to set this up to trade this down to that $14 target. But what we would do is we'd sell a delta that's going to pay us at least 1/3 of that. That would be here, 33 cents. So we'd theoretically collect about $1 against that 85 cents of time decay. That would put us into a net positive time decay scenario. But we're planning on rolling this down and out as we go. As we get close to that expiration or close to the 17, we want to roll it down to the next delta somewhere between 30 and 40. Now, realistically, I would be selling this 17.50 because it's a delta of 34. That pays us 61 cents. So if I could get 61 cents and 61 cents and 61 cents 3 times, we're going to get $1.83 of time decay against our 80 cents of time decay. And again, we want to roll this down and out every time we get close to 17.50 or to that expiration. But every time we should be collecting near 50 cents, 60 cents, 70 cents. So if I can collect 60 to 70 cents every single time, it becomes a positive time decay scenario, and we'll be able to roll it down until we get to that $14 target. and we should end up with a $7 wide spread or a $9 wide spread, depending on which one we want to sell. As we go down from 22 to 14, that would give us 8. If we went to the 2250, it would be about 850. But what we'll end up with is about an $8 wide spread that in the end, after all is said and done, we will have paid about $3 for an $8 wide spread by the time we get there. And we have 6 weeks to do it. Now the timing on this, again, going into the close, the spreads just got really wide. It's a little bit squirrely. We'll have to look at this again tomorrow morning to see if we can get these to price well. And if we do, then we can take a look at taking an actual position on Rocket in the morning. That's going to do it for me. Thanks for watching. We'll talk about more of the mortgage companies, the banks, and the regionals in our session on Thursday and Friday.